We'll go ahead and get started. I wanted to say good morning to everybody. I hope you guys had a wonderful Thanksgiving. Today is November 29th, 2021. I know I'm still a little bit foggy from taking a couple of days off and not being in the thick of things for the last 4 days, I guess. But we're back at it and we're excited to go. So I hope you are too. We got a lot that we're going to be covering today. If you've been following this video cast podcast, I don't know if it's called podcast, but this video training, it's archived here on the REI USA platform. We are now on basically the 8th segment of this training class called Walk the Flip. So let me introduce myself. My name is Carson Olinger. I am president and CEO of Capital City Equity Group here in Atlanta, Georgia. I kind of work in the northeast corner of Atlanta and do a lot of my work up in that general area. But we kind of also open up all over the metro area. We're recently going to be expanding into Charlotte and to Tampa. So our business is growing. And just a little bit about myself, I am a real estate investor. I do this full time, and I've been doing it not quite 5 years. It'll be July of 2022 at 5 years. So in a lot of respects, I'm just getting started just like you, but I've got quite a bit of experience. I've closed 122 deals, and we're working on our 24th flip right now. It's a large project that we're dealing with up in Gainesville. And as a matter of fact, if you've got a pen and paper, write this down. If you want to kind of come on site and see what we're doing in a flip, we're conducting a on-site rehab class called Walk the Flip, which is going to be at our property this Wednesday, December 1st. That's this Wednesday, December 1st, from noon until 2. It is in Gainesville, Georgia, so it's a little bit north of the city. So be prepared to drive up a little bit. And by the way, bring your boots, because we're going to be out in this field. It's a large house on 12 acres, and we've just done everything we could do to kind of tear down all the weeds and stuff. So there's going to be some dirt around. You might get your shoes dirty. So ladies, don't wear heels. It's an active construction site, and we're going to be rehabbing a 5,200 square foot home on 12 acres. So it's going to be quite an undertaking. So come out and join us then if you can. So let me go back. My name is Carson Olinger. I'm with Capital City Equity Group here in Atlanta. And my number, if you need to reach me directly, excuse me, one quick second. Excuse me 1 second. Sorry about that. Had an issue downstairs. Whew. Okay. Thanks for being patient. This is life. So my number is 678-478-2230. And you can reach me directly on my email at carson@capcityeg.com. So we're going to get started. I had to run downstairs. We had an issue with a pet. Let me get started. And we've got a couple of people joining us today. So it's a smaller group. If you've never joined us before, I would encourage you to go back and look at some of the other things that we've done, starting with this. This whole process, we started from acquisition all the way up to financing and how to deal with that. And then now we're here in the middle of the flip within our process here on our 8th installment. So what we did when we first started, I'll just go over originally what we did. We targeted and we identified the project and the market we were going to go into. And then we costed out a rehab with an initial walkthrough. And then we went into acquisition. How did we construct the deal? Did we do owner financing? We went through all those things, contracts, all those kind of things. And then we had a final cost out on our rehab. We brought in our GC to understand what that was going to look like. And then we had to get funding. Where are we going to get funding? We went through various ways of getting funding, and whether it's hard money or private capital or your own money or what have you. And then we started off with the first day of rehab, actually like the first 30 days, really the initial start of the rehab, which is in fact where we're at on our current rehab up in Gainesville. So we're within 2 weeks of just getting started. We just gutted out the house and stuff. And then last month we talked about the final push on the last end of the rehab and how that was going to look in like the last 6 to 8 weeks. And now today we're going to be talking about the last 2 weeks of any kind of a rehab, what that looks like. So if you're in the last 2 weeks of the rehab, it's kind of like your final push. You might be staging, you might be doing a lot of the light touch-up work. There's a lot of little details that need to be done. Most of your construction should be done. If you've had any, your permits should be all wrapped up. You're looking maybe at certificate of occupancy. They call that a CO. That's only if you had a lot of permits and things like that. If you're just doing a general cosmetic rehab, you're not going to need that from the county. So the last 2 weeks are pretty intense because there's a lot of I's to dot and T's to cross, from little painting, walking through with blue tape and punching out some stuff that need to be done like that. So what I want to do, since we have a smaller group, and I've done this before and it's worked really, really well because we can dial in. You've taken the time to be here today with me, and I want to give you guys some one-on-one attention. So what I'm going to do is I'm going to open up our panel for all the people that are attending, and you guys can just turn your microphones on unless you just don't have the ability. And if you feel comfortable, you just talk directly to me, and it's like a normal Zoom call. We can answer questions directly. So I can talk around and do a lot of different things, and I can give you some information that'll help, and we still will do that. But I wanted to take any questions you have, because you might be in the middle of an active rehab, or maybe you've got a deal you're trying to take down, you got some questions. What I want to do is I want to focus on what your specific questions are so we can help you, because that's why you're here. You're here to learn. And if you got questions that we're not answering because we're not engaging you directly, then it loses its power. And we want to create that power here for you as a coach, as a platform. So give me 1 second here, and I'm going to open up this to everybody to talk. Okay. All right. So everybody should be able to speak. So I got Edwin, I got Matt, and Michelle. So can you guys all hear me? Can you all have the opportunity to speak?
Good morning, Carson. I can hear you.
Good, Michelle. Thank you. And Edwin and Matt, you're still on mute. If you want to speak, you've got the ability to do so. Since
good morning.
Good morning, Edwin. Thank you. How are you?
You're doing great, sir. How are you doing?
Good, thanks. I'm going to turn my volume down just a little bit. Yeah, I had a little bit of an issue downstairs, so I apologize. I had to run out. Working from home has its advantages, but also, let's see, Matt says he's not able to speak. You're on. I've given you the ability. You got to go down in the bottom left-hand corner, Matt, and click your mute button, and that'll allow you to mute. That'll allow you to speak. Does that make sense, Matt? Oh, you're not in a place to speak. That's fine. If you got questions, you just type them in and we can go from there. I appreciate that. What that's telling me is Matt is probably doing something else, like maybe another job, and he's trying to learn. So he's really serious about what he's doing. So I appreciate the fact that you're doing that. If you got questions, just type them in. I can see them as they pop up. So Edwin and Michelle, do you guys have any questions directly that I can help you with personally?
Not so far. I'm sure as we go, as we go, I may have questions.
Okay, and Michelle, tell me, how far along are you in the investment process? Are you new to the game? Have you done any flips? Do you have any experience, or is this all kind of new and you're just trying to absorb it all?
I'm all kind of new, so I'm
Okay,
just
that's
here to,
great.
here to
And by the
learn
way, I
from you.
started off, my first deal was my first deal, right? I didn't have
Right.
experience coming in this. So we've all been exactly where Michelle is. What about you, Edwin?
Carson, I've been investing now for like a year. Everything I've done has been strictly on the wholesale side. To
Okay,
be honest with you, I have a full-time job, so I'm terrified of doing any fix and flip. But I joined the call because I still want to kind of learn a little bit more about, from your perspective, how do you do flips and all that, right?
sure.
Because I know eventually I'm going to have to do that. The deals right now for wholesaling are very, very slim.
I agree.
So I think that I would definitely continue to learn, from you and from everybody else, right? On what are the things to look out for. My biggest fear is dealing with contractors, to be honest with you. That's my
Okay.
biggest fear. I've had a really bad experience just with contractors in the home. So I could imagine how it's going to be, when I have a full-time job, don't have a project manager, and then have contractors that don't show up or show up when they want to. That's pretty much my biggest fear. So I'm trying to get over that fear, pretty much.
Understood. And that's a legitimate concern. Absolutely. And real quick, Michelle, do you have a specific vertical market which you want to get into? Wholesaling, buy and hold, fix and flip? I mean, what are you trying to get into? Or are you just trying to do a little bit of everything?
So for me, I'm in the San Francisco Bay Area, and
You're where?
I'm sorry,
Where'd you say you were?
San Francisco Bay Area.
Oh, San Francisco. Okay, you're up early.
Yes. And I'm new to all of the game. I'm in wholesaling.
Okay,
I haven't had any deals just yet, but I'm still learning as I go along, and I wanted to chime in with you on fix and flips. I want to do that as well.
perfect. Okay, and Matt, I don't know if you can type in. I'd be curious to know where you're located. Edwin, are you in Atlanta?
Yes, I am, sir.
Okay. So a little bit real quick, Michelle, I want to give you a word of caution from my opinion. The San Francisco Bay Area is a pretty volatile market. Okay. With the culture and the economic indicators that we're seeing nationally, my strong opinion is San Francisco and that whole western coast area from Seattle down, for the most part, in the large metro areas, is going to take a double-digit hit late next year. Okay, I think it's going to be a significant problem. So be careful buying homes, okay, that you own, that you're going to be stuck in with a price drop. Wholesaling, you're a little bit more insulated. You should be okay, but because it's just a contract. But if you buy properties, be careful that you don't buy something and then it drops. Make sure you're getting your properties at 45 to 50 cents on the dollar when you get them under contract, because if you're getting them too tight and the prices fluctuate, you're going to be stuck with a property that doesn't have any equity in it. And that is one of the markets that is going to go down probably in the latter part of next year. So just be aware of that. And that's just my opinion. I mean, someone else might tell you differently. I don't want to scare you away, but you can still buy there. Don't get me wrong, but just be careful how you buy. Okay, there's a way to do that. Edwin, you're here in Atlanta. I'm not sure, Matt, where you're located, but the Atlanta metro market is very strong. The Southeast is very, very strong. I'm reading one of them. Let's see. Okay, so he's in Macon and Dublin. Okay, so yeah, the Southeast is fine. We're going to be very, very well insulated. We will take a little bit of a dip in the near to long term future, but I think we're going to be fine. When I talk about a dip, I'm saying, hey, the house is worth, it's been crazy here lately. Like houses were 300,000. I know, Michelle, that's crazy to understand, but you're probably dealing with 800,000, 900,000 just entry level out there. But here you can get a decent home for $225,000 to $300,000. Let's just take an example of a $300,000 house a year and a half ago, and you went to sell it, you'd get 300,000. Well, with the market going on now in the Atlanta and the Southeast specifically, that house might be worth 350. Okay, people are bidding and they're overbidding, maybe paying 360, 370 for it, and people are making a lot of money. So what I say about a correction is, what's going to wind up happening is that $300,000 house is going to drop down to about 320. Okay, still going to be good value. You're still going to have a lot. You're just not going to have all the craziness of upside to it, which is great now. But it's going to kind of settle out. Different story on the West Coast. So I just wanted to preface that. A little bit of background. I started off wholesaling. That's all I did. Just like what you're doing, Edwin. I kind of jumped into it full time, but all I did was wholesale. That was it. But I knew that in order to grow the business, I had to get out of only wholesaling. But what wholesaling did, and Michelle, you might want to take note of this as well, is it allowed you to create a platform through a network that you can create and get an understanding of the real estate market so that you can overcome some of those fears. Because Edwin, just like you, I was terrified. I didn't know what I was going to do. I was like, how am I going to get into this? How am I going to buy a house? I've never even done this before other than the house I live in. Where am I going to get the money? What if it falls apart? What if? All of these things. And that put me on the bench. And I saw people around me being successful. I said, hey, if they can do it, I can do it. Not that I'm smarter than them. It's just that there's other people doing it. There's got to be a way effectively to do that. So one thing that I'm a huge proponent of, and all of you guys, I would totally recommend that. So whether you're in San Francisco, Atlanta, or Macon, like Matt, you guys need to go to networking meetings, okay? Network. And so what does that look like? Go find real estate investment associations. Have you guys heard of REIA or REIA? You know,
Yes.
Okay. So there's a great platform. Doesn't matter where you're located. You could be in the West Coast, East Coast, what have you. Go to meetup.com. If you ever heard of meetup.com, Michelle, you heard of Meetup?
Yes, I have.
Okay, so you can create an online profile for free. All right. And when you do that, what you want to do is create your interests, right? What are your interests? Well, obviously, real estate. Another keyword would be investing, networking, any kind of buzzwords that would tie into what we're doing, wholesaling, buy and hold, flipping, you know, all those kind of buzzwords that you can chalk into that REIA. And what's going to happen is it's going to start telling you where all these meetups are that kind of cater to what you're looking for. Okay, typically REIAs. So you can then go to these meetings for free. Typically, it's just people getting together at a bar or a restaurant, and they're talking. It might be a group of 5 people. It could be 500 people. And what you're going to do is you're going to walk in and say, "Hey, you know, my name's Edwin. I'm Michelle. You know, I'm Matt. I'm a new guy. I don't know what the heck I'm doing. I just want to learn. What do you do?" And then just let them talk. And what you're going to do is you're going to spend 5 minutes with this person, 5 minutes with that person, and you're going to go out circulating around and collecting business cards. And what you're doing is you're letting people know that what you do and what you want to do, and you're also getting their information. And then now what you do with that information is important, Edwin, Michelle, Matt. What you're going to do is you're going to capture that information. I put it on an Excel spreadsheet. So now I know their first name, their last name, I know their phone number, their email address, kind of what type of business they are. If they're XYZ real estate company, I put that in there. I don't necessarily need their address or anything like that, but then I put where I met them. Hey, I met them at Gwinnett Work, or I met them at, you know, North Point REIA, or whatever you want to call it. Wherever you met them, you can have some type of trigger, because over time, you're going to have a lot of people on this list. Now, what that's going to do for you is it's going to give you buyers in your relative market, your respective market, that buy property. So if you're wholesaling and you pick up a deal, now you've got a list of people to send it to. Don't go buying other people's lists. Half the lists, if people are selling you a list, you're going to wind up getting in trouble, because you're going to get spam, kickbacks. You're going to get blocked from, you know, Google and other areas like that, because you got too many kickbacks coming from bad emails. So only put emails in that you've got their permission to do so and met with them. But my point is, you're going to network. It's going to do several things for you. I just mentioned one. You're going to get these people. Who are you going to meet there, Edwin? You're going to meet investors. You're going to meet general contractors. Why? Because these GCs, they're looking to pick up business too, and they know where the people are. So they're going into these REIAs as well. I met several GCs who I work with through this. You're also going to talk to other investors. Hey, what GC do you use? What contractor do you use? Hey, do you have a flooring guy? Do you have a painter? And you're going to get recommendations from people. Some people are going to be pretty tight-lipped. If there's one thing that people don't like to share, it's their contractor. So that is kind of like pulling teeth to try and figure out who that is. But you'll be surprised at how many people will recommend a painter or a flooring guy. A GC is going to be a little harder to come by. But if you wanted to pick up some of those smaller guys, you can do that pretty easily. And you're going to create another list of all of those contractors and what they do. And you're going to start building this list. So then when you find a property, you're going to have exit strategies. I can either wholesale it to this list, or hey, I can potentially flip it if I've got the capital, or I can work on getting capital. But what you're doing here is you're creating credibility. You're creating a presence of yourself, and it's free. It's just taking your time, because I guarantee you, well, I don't guarantee, but I'd be willing to bet most of you have more time right now than you do money. Okay. Just like me. When I started off, I had no money. I had nothing. And I started wholesaling because why? It's an easy entry point. There's a low barrier. So I didn't need to worry about having a whole bunch of money to buy a house. I'm moving paper. But as long as I did it ethically and properly, it worked out very well. So we're talking here about walking the flip. How do we flip a house, right? So Edwin had a great, concern about contractors. And Michelle, you're trying to gather a bunch of information. And it looks like, Matt, you said you've been a member of REI. Is that South Atlanta REI through Stacy probably? Okay. And you both hold licenses. Oh, you guys homeschool. So my wife homeschools our children as well. So we've got a lot of autonomy. So having time is great for this type of business because you have more of that than you probably do money starting out. And that's fine. What's going to happen if you work your business is you've got the time and not enough money. It's eventually going to switch to where you're going to have the money and not enough time. You're going to start valuing your time more so than you do your money, because your time is going to generate you money. So I see a lot of value here. Why? Because this is how I learned. I didn't pay for a course. I didn't drop $50,000 in a ballroom for some company that's going to give me a lot of good information, because they do. They give you good information. But I may not process that information the way that they teach it, and I get lost. So I felt that I learned better by working with people, kind of like what I was trying to do. And I met at these REIA meetings and said, hey, you got a flip going on. You mind if I come by and just pick your brain and maybe buy you lunch or whatever? And I just started working with these people and figured out how to go ahead and get into the business. And after about 20 wholesale deals, I actually got in a pinch. I was stuck. I had a contract and I couldn't move it. I was stuck. And it was 165,000. I was trying to sell it for. My contract was at 150. And a guy I met before, he came to me and said, hey, I'm looking for a flip, but I don't want to pay 165 and I don't have any time. I'm doing some other things. He says, I've seen you working. You seem like you're an ethical guy. I think I sold him one other deal before. It's an easy flip. It was just paint, carpet, flooring, nothing big. He said, what if we buy the property, you and me, Carson? I will put up all the money. You supply the deal, but at your contract price, not at 165, at 150. So I get no money on the front end. He'll pay for everything, but I have to line up the contractors and I have to manage the rehab. And I'm thinking about this. Okay, I've got an opportunity here for someone who's actually flipped a house, who can give me some guidance, but I've got to spend the time to do it. And so I kind of went out of the wholesaling deal and into the flipping deal, and we flipped the property. And it was a 50-50 proposition. He put up the money and we both made money on it. It took us only about 4 or 5 weeks, but it was an easy flip, and it kind of got that monkey off my back, right? And I had a couple of contractors I was juggling around, and it worked out because I knew some people through the REIAs that I'd met, and I got a painter and I got a flooring guy, and they all seemed to work out pretty well. So was that luck? I don't know. Some people might say I got lucky. I guess you could look at it that way, but I looked at it from Edwin's perspective. Hey, I'm concerned. I want to be making sure I'm vetting these people properly. And I felt I did that through the network. And so, as I said, I'm a huge proponent of networking. Okay. So I hope that answers some of your questions about getting that monkey off your back. My feeling is, don't sit on the bench, get into these meetings and ask the questions. Hey, what's 2 + 2? Hey, what's 3 + 1? They seem stupid to you, but you don't know the answer. And the more you're around real estate, people will be speaking the real estate language. Okay. You'll be hearing terminology that you've never heard before. What does REIA mean? One question I had was, what is, what's the word? When it's all said and done, I just drew a blank. After ARV, what does ARV mean? I didn't know what that meant. And it seemed like a tough question to me, but everyone's like, oh, it's after rehab. I'm like, oh, okay, that makes sense. And then we start learning about how to figure out what makes sense financially on a rehab, right? How do you buy a property and know at what price point to buy it at if I've never done a rehab? How do I know what my construction costs are going to be? Well, that was simple. I went and brought some of these guys that I'd met and said, hey, Mark, I need your help. I've got a property over here I got under contract. I need to understand what that rehab value is. I'm going to go in, I'm going to give a rehab value estimate of what I think needs to be done. I'd like you to walk right behind me and then give me your assessment of what you think needs to be done. Let's compare the two so I can learn, and I'll give you a cut of the deal. And he's like, sure, why not? So did I pay him out of my own pocket? No, I paid him from the profit of the deal. He was willing to give me information that I needed, so I gave him something in return, but I didn't have to come out of pocket to do it. I let the deal do it. And that's the way I like to work. And that's what I do here in Atlanta. And I coach and I mentor other people, and we do that here. And it works pretty well. And eventually they grow up like I did. I grew up and I became my own investor. And so I didn't need as many mentors as I had before. So that's the whole point of this platform right here. You can learn from people like me and 25 other people on this platform as coaches in different areas, whether it's creative acquisition or rehabbing or Airbnb or what have you. So there's a lot of opportunity here. We got Eve joining us too. Eve, we've got a small group here. So what I've been doing is letting everybody speak if they want to. So I'm giving you the availability to talk if you'd like to, and just have to unmute yourself when you're ready to do so. But thank you for joining us. So with that being said, are there any other questions, Michelle or Edwin? Matt, you've got Eve, now that you're here, if you have any questions about where you are and what you're trying to do.
No questions yet, Carson, but I thank you for all that value. And I heard you when you said, it's going to take a dip next year. So I'm paying very close attention. Thank you.
Sure. I see your question here, Matt, and we'll come back to that on scope of work. So that's a good question. I was going to address that anyway. So Michelle, what's your question?
Oh, I said no questions as of yet, but I heard everything you said and I'm taking my notes. And I know you said there will be a dip next year sometime. So I'm taking heed to that. Thank you.
Yeah, sure. Absolutely. And Edwin, did you have anything you wanted to talk about?
Carson, I do got a question.
Yes.
I think at the beginning you mentioned that this was like part 2. So I guess the last call that you had, which I wasn't part of, you covered pretty much the beginning process of the flip. So my question is, what are you finding right now that investors are buying at? Like ARV, normally we say, 70%, 70 cents on the dollar, right? Minus repairs. What are you finding that number to be right now in the condition that the market is right now?
So I think you alluded to this a little while ago, Edwin, that it's a little bit harder to find deals right now. And I would agree with you. So inventory is low, and people, the layperson that owns a house, sees the fact that everybody's making a lot of money, so they're demanding more from their property. So it's easy to fall into that trap. Okay. And because we're all looking for a deal, we sometimes massage an opportunity to create a deal when in fact it's really not a deal. So I use the mathematical, and if you got a piece of paper, write this down, because this is critical, I think, to making sure you understand wholesaling and fixing and flipping. The math is the same, because ultimately you're either going to flip the property yourself, so you need to follow this math in order to work it right and be profitable. But if you're going to wholesale it, you're selling it to an investor like me, who's going to apply the same math to your deal. So Edwin, you mentioned ARV minus 70%. That's a fair assessment. I'm not that aggressive because it's harder to find those deals. So you can look at it ARV times 70% or ARV minus 30%. So what I do is I use ARV, I subtract 25% or multiply by 75%, right? So ARV minus 25%. Let's just use easy math. I got $100,000 ARV, right? I subtract 25%. Okay, so now I'm left with $75,000. All right, now I've got a rehab. Let's call that rehab $25,000. Okay, so now I've got a $25,000 rehab. And to your point, Matt, how do we determine that? We're going to get to that in just a second. And so we got a $25,000 rehab. Now we're at $50,000. So I need, as an investor, to buy that house at $50,000. Okay, but Edwin, if you're going to wholesale that property, then you need to mark it down and get it under contract lower than 50 so that you can add your wholesale fee onto it reasonably, and I can buy it at around $50,000. Now, does it have to be exactly at 50? No, but that's the target. And in this market, you can say, okay, this is a great area of town. Everybody wants to be here. I can't get it at 50, but I'm at 56. Still a decent deal. And as thin as opportunities are, people are probably still going to wind up buying that deal because there's still enough meat on the bone and there's not that many opportunities. But now you start getting up into $65,000, $70,000 to sell it to somebody and they still have $25,000 worth of rehab. There's not much profit in that thing.
There's none, right?
Say again?
No, I said there is none. And then then the closing costs and all that, which is in the 70%, right? Or 75%.
Right. Well, so when a lot of people don't understand, say, oh, you took the ARV of 100 and you subtract the 25%. Well, what is that? Where did that go? Just 25% is gone. What happened? So that 25% is kind of like a little encapsulation of all of your cost structures and your profit. Okay. So let's look at what that really is. $100,000. When I buy the house, I probably got $2,500 to $3,000 in closing costs.
In
right?
closing.
Okay. So that's in that 25%. That's already factored in there. All right. When I hold the property, I got 3, 4, 5 months to hold the property. I might be holding it at $2,000 a month. At 4 months, that's $8,000. What is the holding cost? Those are my taxes. Those are my insurance, my power, my water, my gas, any note that I have. I got an interest bearing note. So I got to pay, $800,000, $900,000 a month on the note. So I've got $2,000 a month. So $8,000 is out of that equation, right? So now at the end of the deal, I'm all fixed up. I sell the house. I got to pay a real estate agent. Most people have to use an agent. So I always assume 6%, 3 on the buying side, 3 on the selling side. So you got your selling costs on the back end. You've got your closing costs on the front end, and you got your holding costs in the middle. Well, that's not $25,000 in this scenario, but the balance left over is my profit. So my profit, I want to be on a flip. I want to be in the 15 to 18% range at a minimum. Okay. I'm not taking a deal and making 8%. Okay. If I resell a house at $100,000, I'm not making 8. I can do more of that wholesaling it. It's not worth my time to do that for $8,000. I got to be making $20,000, $25,000 on that deal to make it worthwhile. So that means I got to buy it even cheaper, right? I got to get way down and dirty. Well, how do you do that? How do you buy a $100,000 house at $35,000? Well, you're got to focus on motivation. Okay. Not everybody's going to want to do that. You have to target and identify motivation. So Edwin, you said, hey, this is the second meeting here. This is actually the 8th. Okay.
Oh, okay.
Okay, so we've gone over a lot of what we're talking about right now. The last 2 meetings that we did here kind of focused on the actual flip itself, but the ones leading up to it were identifying the property, making an offer on the property, identifying what the scope of work is going to be. And I'm going to talk to Matt about that in just a second, because that's critical, not only if you're flipping, but also if you're a wholesaler. Okay. So that ARV minus 25%, then you subtract your rehab. Okay. And that's your buy price. Now that's a buy price if you're invested. I'm buying that at $50,000. If I'm wholesaling it, I need to have my contract at 44, 45,000, right? In order to make $5,000 on the deal. Okay. It's going to get bigger as my numbers get bigger, but I'm not expecting to make $40,000 on a $100,000 house unless I get it at $1, which is rare, right? So don't get greedy in trying to make a lot of money on a wholesale deal if it goes into that buffer zone of if you're looking at this thing going, hey, ARV minus 25 is $75,000, minus 25 rehab is 50. And now if I'm going to wholesale this, I'm selling it at 62,000. That's not a good deal. No one's going to want to buy it. It's going to sit. And the reason is you didn't get it at the right contract price. Or maybe you did get it at the right contract price. Maybe you got it at 40 and you're trying to make $25,000. You're not going to do that there. You might find some sucker, but what you want is you want consistent product going out at a good price. So when people see that Edwin or Michelle or Eve or Matt put out a wholesale deal, they're going to want to keep coming to you because they know you're putting out good deals. Not the fact that you make more than them. Don't worry about that. There's going to be times when you might make more on a deal than the flipper does. And that's fine. but there has to be that level of meat on the bone for the investor to take it. Because as long a good investor is going to recognize that, they're not going to care how much money you make. I've sold deals to people where I've made 2x what they made on a flip because I got it at a great contract price. But I've had other people tell me, well, I'm never going to buy that from you because you're making more than I am. I said, you're absolutely right, because I'm not going to sell it to you. You have the wrong mentality. I don't want to work with you. You shouldn't worry about how much I make, and I shouldn't worry about how much you make. Doesn't make a hill of beans difference. If it's profitable for you, take the deal. Don't worry about how much I make. Doesn't make a bit of difference. If you don't like it, go find the property yourself. Well, I can't do that. I don't have the time. Here I am. It's just that simple. It doesn't have to be complicated. So keep those things in mind. So Matt, how do we scope out a deal? All right. I had a little bit of a background in construction. I paid my way through college in carpentry and concrete. So I was around the construction sites. I knew what to look for. But what I didn't know is the cost. I never costed these things out. I didn't know how much it costs. But as a wholesaler, it's critically important that you understand that. Okay. There's nothing worse than getting a deal from a wholesaler and he says, oh, it's a $15,000 rehab. And I walk in the property and I'm looking at 50, easy. I'm like, whoa, wait a minute. I just wasted my time. Okay. And I'll get to hard money as well. Okay. But understanding what a rehab costs are is critical, whether you're an investor or you're a wholesaler. And here's why. It's a significant part of what you're going to be getting into, because you're either going to try and move the product as a wholesaler, but you have to represent it as what it is. You're selling the contract. You're not selling the house. You're selling the contract. And in so doing, you have to establish credibility. When people see you, they need to know that what you're telling them is correct. And if you're all over the map and you don't know what you're talking about, you're going to lose that credibility. And when you eventually do have a good deal, you've been crying wolf for so long, no one's going to want to pay any attention to you. So you got to be consistent out of the gate. So go back to my analogy, or actually my story of when I brought my friend in, Mark, and another guy, Stan. And I said, hey, you guys have been flipping homes. Tell me what I'm doing wrong. What is this rehab? How much is this? I'm walked through. I came out my first rehab. I said, $7,500. They said, no, it's 32. I was like, whoa, how did I miss that? And it's not because I didn't know. It's just I didn't know what to look for. And we walk through and he goes, you got to look at this. You got to, if you pull the carpet up, you're losing your baseboards and your shoe molding. You got to repaint this room. You got a new HVAC system. I didn't even think about the HVAC systems. Your insulation in your attic was matted down. You need new insulation. Little stuff like that. Here's a crack in your foundation. I didn't see it. Stuff like that. So I would encourage you through your network, find people that can do this and ask them to come to your deal and give them a piece of the pie once it closes. You're going to be gaining information by doing that. And after 2 or 3 of those, you're going to get your mind wrapped around this, and you're going to have the ability yourself to scope out that rehab and to tell people, hey, this is a $25,000 rehab. Now, the other thing you're doing when you're marketing a wholesale deal, always give the retail flip. Hey, this is a $30,000 retail flip. But yeah, keep in mind, someone might buy it as a rental. And instead of putting in granite, they just put in laminate countertops. All right. So they're saving money. Don't say, hey, this is a $20,000 rental flip. It's a $35,000 rehab. Let them figure that out. Okay. Even if you know they're going to rent it, if you misrepresent it as a $20,000, $25,000 rehab as a rental, and someone comes in there with the idea of flipping it, they're going to see your numbers are off. Better to err on the side of caution, be on the high side, and let them see the value. And you're saying, wait a minute, I'm leaving money on the table. Well, not really, because you don't know who you're selling it to, and you got to be consistent. Money will come. Money will come. That first deal, man, it's like, guys, I use this term all the time. It's like being at the nightclub when you're a single guy, right? You're hungry. You're looking at all the ladies are looking at you like, I ain't going near that guy. He's just too hungry. He's got that the eye of the tiger. You know, they don't want to be around you. But if you got a girlfriend and you're hanging out with your buddies, it seems like the ladies are coming up and talking to you. Why? Because you have an air of understanding. You know what's going on. You're confident. Okay. And that first deal is always tough because you've got that hungry look. Be pragmatic, use the math, and learn from other people around you. The network is your net worth. It will pay dividends. It's not going to happen overnight. It's going to take time. Okay, so I hope that explains scope of work to some degree. I can't go into the details of, hey, what does this cost? What does that cost? We did actually go in that pretty in depth, I think in week, which was it? It was week number 2 and week number 3 on, if you go back in the archives. I think they only archive these for 90 days, so it might not be there. But if that's something you're local here and you want to work with me, I can probably get in depth with you. I gave you my email and phone number earlier, but I don't think, Matt, that it's still there. They only go back 90 days. So, we're talking about, floorings at $2.85 a square foot. We got down into the nitty gritty of it, right? So there's a lot we can go into there, but suffice it to say that it's best, if you don't know, to bring somebody into the deal with you that does and share a piece of the pie. Don't give them 50%, say, hey, you're helping me out here. What if I just paid you a consulting fee of $3,000 when I close it or whatever, and just work it from there. Now, if they're going to consult on the entire deal, they're going to walk you through the entire flip, and they're going to put money up, it's going to be a little bit different scenario contractually. Okay. So another question that popped up here, and we addressed that as well in, let's see, this is hard money. We talked about it, kind of go back through my notes here. We talked about funding in week number 5, or I should say not week, but month number 5. We went specifically into hard money. So a lot of people freak out when they see a hard money. Hey, I'm going to lend you $100,000 at 12%. We're like, whoa, 12%. Don't worry about it. It's just the cost of doing business. It just is. And you're eventually going to learn that. The deal just needs to be able to absorb it. If the deal can absorb that and you're still making money, you got no skin in the game. Okay. So how does hard money work? Most people don't understand hard money because it can be a little complicated. So let's act like I'm a hard money lender. Okay. And Matt, you've come to me and say, hey, Carson, I've got this house. It's worth $200,000. ARV is $200,000. It's got a $50,000 rehab. And so if we use our math, right, you should be buying that at what? Matt, what should you be buying that house at? 200,000, right? Minus 25%, minus 50,000. You should be buying that house at $100,000. So let's just use that to keep it simple. All right, I'm buying this house at $100,000, Carson. Can you loan me the money as a hard money lender? Sure, I can do that because we've done a assessment of the property. We've appraised it. We recognize that when it's done, it should be worth 200. So how much am I going to lend you? Well, a lot of it depends on experience. So let's say you don't have any experience, because most of you may not. So most lenders are either going to give you 70, 75, or maybe 80% loan to value on the hard money acquisition. Okay. When you get more experience, they'll probably lend you up to 90%. But also with less experience, you're going to have a higher interest rate. And this is only interest only. It's not principal and interest. It's interest only. Okay. Remember that. And let's just say it's 10% to make it easy. So we got $100,000 loan that you need, Matt, for this deal, but you've never done a deal. I see value in it as a lender. So I'm going to loan you 80% of the acquisition. So out of $100,000 acquisition, I'm giving you $80,000. All right. So $80,000 will be wired to the attorney upon closing, and you're going to have a contract with me. It's like a lender, and you're going to have to pay it back. Okay. At 10%. So $80,000 at 10%, you calculate it pretty simply. $80,000. Oops, that's $80,000 times 10% is $8,000 on an annual basis. Okay, so divide that by 12, and you've got $666 a month is what you're going to be paying on your interest only note. So that comes into your carry cost. If you hold it for 3 months or 4 months or 5 months, it just adds up. So think about that. $666 a month. Now you got to have that money to pay, because you don't pay that at the end. You're paying that as you go. All right. So you got to make sure you've got that capital. Well, wait a minute, Carson. I don't have $20,000 to put down on this house. Where am I going to get that? Oh, and then I also need another $50,000 to flip it. So a lot of these hard money lenders, they will also loan you up to 100% of the rehab, meaning they'll give you all 50,000. However, this is the tricky part. They're not just going to say, here's 50,000. Okay. You're going to need to start off with some of your own money. So right out of the gate, you need $20,000 to make up your gap between the 80 and 100 on acquisition, right? And then you're also going to need closing costs, let's call it $5,000. So now you need $25,000. And then you're gonna be looking at this thing going, well, I gotta hold this thing. It's gonna cost me $2,000 a month to hold it with taxes and insurance and everything else. So now I need, this is a 5-month deal, I need another $10,000. So now I need $35,000 just to buy the property and know that I can carry the note. And now I need another 50 to flip it. But wait a minute, the hard money lender is gonna give me the 50, right? Well, they are, but to a point. So what they're going to do is they're going to reimburse you that 50,000. So what you need to do is come up with probably another 15,000, maybe 20. And what that's going to do is allow you to fund the rehab on the front end, get 3-4 weeks into it and say, hey, hard money lender, I've done all this work. Here it is. I need you to come out and inspect the property, which they're going to charge you $100, $150 for the inspection. They're going to see that, hey, here's my scope of work. I've done this. Come look at it, confirm that it's done. Oh yeah, I see that you've done $15,000, $18,000 worth of work. Here's a reimbursement. Here's the 18,000 back, and they're going to give you that. Now your interest is going to go back up because now you got 80 plus 18. It's going to recalculate from that point, not going backwards. Okay. Yeah, Eve, you got a question? Go ahead. Just unmute yourself.
Hey, Carson, this is Eve's husband. Actually, this is Doug. We're both on the call.
Yes, no problem.
Hey, Carson.
You were
Hi, how are
talking
you?
about the hard money, and we're in a situation. I think Eve has mentioned the situation we're in regarding our first flip here. But you were talking about hard money. Right now, we're looking about at judging some of these hard money lenders. The one we're thinking about going with is about a 10% upfront rate, meaning that we have a cost of rehab that's around $75,000 to rehab. They're willing to fund 100%. But it's going to cost at the beginning. You're talking about, interest. You talk about 3 months of interest up front, attorney fees and such. It's running to around $9,000. Is that typical?
They want 3 months of prepaid interest up front.
Yes, about $600 a month up front. And this is our first flip, so there's that as well.
Yeah, that's probably one reason they're doing that is just to ensure that they've got the money. That's not necessarily a bad deal. That rate's actually pretty decent at 10%. I've done 20 some odd flips and I'm borrowing money at 8.5. So that's about as good as you're going to get.
Okay.
So don't expect you're going to get 3% from a hard money lender. It's not happening. And the reason is this is speculative. There's risk. There's a lot of risk.
Yeah.
So they understand that. So it costs a little bit more. I look at it as the cost of doing business. It's not my money, it's somebody else's money. My risk is low. That's why I buy very, very conservatively. Depending on what lender you go with, they might want a little bit of prepaid interest. There's other lenders out there I can recommend to you. Where are you guys located? Are you in Atlanta Metro?
Atlanta, yeah.
Okay, yeah. So I know some people personally here that can help with that. I do not lend money, so that's not something I do yet, but I use mostly private capital. How do I get private capital? I get it through my network. All right. I very, very rarely need to use hard money. But now what I found is it's easier to use hard money on the acquisition than I use private money to fund the rehab, because that's where it gets sticky. Yeah. And it's a little bit easier to borrow private capital because what they'll do is they'll just wire me the money into my account and I can spend it freely. Then I pay them at the end of the deal when I close it.
Yeah.
So I find that being a little bit easier.
Carson, do you have time for a follow-up question, but it's kind of not on the topic of hard money? Or do I?
Yeah, go ahead.
I would like to get your thought on general contractors. We've talked to a few general contractors. We have estimated that this project is probably going to cost around 50 to 70K for the rehab alone. However, GCs we're talking to are talking, I got one at 50, I got another one at 115,000. What are your thoughts on GCs? Or should we just, I'm going to just use the term man up and just be prepared to manage the project ourselves with mentorship?
Right. So here's my this is the way I approach this. And Edwin had a similar question. You know, you're concerned about GCs maybe ripping you off or, you know, taking advantage of you because you don't know the rehab. First, I'd make sure you know what that rehab is. Yeah, you've come up with your assessment of what you think it is. And I'm not saying you're wrong because I don't know, but I would bring somebody in you trust that's been in this business and say, hey, this is what we want to do. Can you walk through this and let us know what you think the rehab would be? Okay. And then you get an idea whether your numbers are actually correct.
So Carson, I mean, interrupt you real quick, but so let's say if we had like, we do have a bit of tutelage from someone who's been in this game a while, but we appreciate everything you're doing. We're treating you as a mentor as well, who's been kind of like guiding us. Would that be as simple as sending him those numbers, or are you talking about someone that needs to be on site?
I would bring somebody into the property and have them physically walk through the property if you can. Okay. And have them look at what you want to do in terms of your scope of work. Hey, we want to put granite here. We want to put this kind of flooring there. We need to put a new roof on. We need HVAC. We need this. We need that. And have them look around the property because they may see some stuff you missed. And then let them, you know, give them a consulting fee, you know, a couple of grand or whatever when it's all done. Yeah. When the deal's done, right? Not now, but when the deal's done. And say, hey, it's our first deal. We want to make sure we do it right. I want to make sure my numbers are right. Get at least one or two of those people. Maybe you got a buddy of yours that'll do it for free because it could get expensive, but it's going to give you, and we just mentioned this a little while ago, it's going to give you a better understanding of what the rehab is going to look like. Okay. Because I'm not saying your numbers are wrong. I don't know, but I would want at least another opinion, a very trusted opinion to make sure I'm not off. Because if I got all these contractors telling me it's higher, then I got to take that into consideration. Keep this in mind. A contractor is going to put on 18 to 22% markup.
We did, yeah.
Okay. I have no problem with that. I have no problem with that. Okay. And here's why. And I use GCs for that reason, because I have one bill. And that is critically important. I pay one guy. I got one point of contact. Here's the question you have to ask yourself. And you said have to man up. Don't look at it that way. Can you do that? Absolutely. Do you want to do that? Probably not. Okay. You all probably have jobs at some point. I did. I worked in the Fortune 500 world. I have a 401k. If you guys have money in the stock market, whether you do or you don't, you understand the process. You got money in your 401k. You got Apple stock, whatever. You got money in the stock market. This is an analogy. Last week, when you were up in New York and you were on the stock exchange floor and you were trading stocks and buying stocks, why did you buy that fund or that stock versus these other two over here? Well, the natural reaction is, well, wait a minute, I didn't do that. Well, why didn't you do that? Well, I invested my money and I've got a broker who handles it. Well, does that broker get a fee? Well, yeah. Does that fund company get a fee? Yeah. But they know what they're doing better than I do. I just give them the money and I invest. Well, you know what? You could be a day trader. You could sit at your desk or your computer and day trade and do all this stuff. Well, I don't want to do that. There's stuff there I don't know. And that's just too time consuming for me. Right. Because you're a day trader or you're an investor. Here in the real estate world, I'm an investor. What does that mean? Inherently, it means making money, make money. It's that simple. Mm-hmm. A GC got a license to do what? Be a general contractor, manage a bunch of people, bring in subcontractors, do plumbing and painting and blah, blah, blah. If you don't have him or her, now you're doing that. Okay. Now you're not an investor anymore. You're a general contractor or a handyman swinging hammers. And people say, well, yeah, but I'm saving 20%. You're absolutely right. You are saving 20%. But while you're spending your time managing 65 people, paying 37 invoices every week and working on schedules and this and that and this, I'm closing deals. And now I've got 5 projects going on when you've got 1 because you can't handle more than that. Why? Because you're not a GC. But you're saving 20%. And I got 5 projects identical to what you're doing. And instead of making, let's say you're making a $50,000 on your deal and I'm making 35. I'm making 35 times 5 because I'm investing. Mm-hmm. I'm letting my GC do the work because he has 4 or 5 crews that he can manage. He's got project managers that can do that. managers that can do that. It's the mentality. You have to think about it. Now, is it bad that you go in and do that here and again? No, I just gave you an example of my first deal. That's what I did. I had to hire a painter, a flooring guy, and a couple of guys to just handymen to trash out a place and to do some minor fix up. So I acted as my own GC, but it was a very, very small deal. Okay. But I learned there that it was still a headache. It's not what I wanted to do. I wanted to invest. Can you do it? Absolutely, you can do it. But that's ultimately not where you're going to want to be if you want to be a true investor.
No, that's not where I want to be or we want to be. Just thinking for the sake of this first deal, you're pretty much saying go ahead and give up the 20%.
The goal in this business is not to make money. It's not to lose money. Okay. So a lot of people look past that and they're like, and I see it all the time. And I was actually guilty of it because, you know, you get to the end of the deal and you're like, man, I'm kind of tapped out of my budget, but I really need to put in this backsplash. I really need to put in this hardware, but I just don't want to spend that extra money because I'm already over budget. But doing so is going to propel you into the next sector of profitability. I do need to say this. It's 9:56. In 4 minutes, I've got to get off of this call and start another call. Okay. Within REI USA, I host another group for new investors in Georgia. I'm the Georgia Super Group leader. So if you're in Georgia, heck, I don't care if you're out of Georgia, it doesn't matter. But if you want to continue this, we can, it's an open forum just like this, where we're asking these questions. We got to log out of this and then can log back in. It's the Georgia Super Group, starts at 10 a.m. Eastern today. I host that one as well. So I do have a hard cutoff that I got to get out of here. So I don't want to leave anybody short. But I also want to say for anybody tuning back in, my name is Carson Olinger. I'm with Capital City Equity Group here in Atlanta. My number directly is 678-478-2230. My email is carson@capcityeg.com. If you are local and you have some time on Wednesday this week, we're taking this concept, walk the flip, and we're putting it on site at one of my active rehabs. And I think, Matt, you asked me how many rehabs I'm doing, or right now I'm just doing one. It's a monster project right now, but I'm looking to pick up a couple of smaller ones. But on average, I'm doing 2 to 3 rehabs at one given time, and I'm wholesaling probably 2-3 deals a month. This year, we've been in acquisition mode, and we've bought 54 properties that we now own. We bought them this year, and we're looking to pick up another 37 more 37 more by the end of January. So the rental market's strong, and we're buying a lot of properties. We're doing that all with private capital, and it's working out very, very well. So I got 2 more minutes regarding hard money, GCs. Those are all great questions. They're necessary, I think, in part of what we're trying to do as investors. I don't have a problem paying people. I just don't. It's just part of doing business. I want everybody involved with my projects to make money. Why? Because they're going to come back and do it again. I have done 122 deals since I started less than 5 years ago. And I have not spent a penny, not a dime of my own money on any deal, not a dime, other than marketing. I spend money on marketing to find my deals. But when I get my deals, it's all private capital or hard money, somebody else. And I borrow everything. And I want everyone involved with it to make money. Because why? They're going to come back to me again. Hey, I made 30 grand with you. Let's do it again. I'm making money and I got no risk other than just carrying the load and making sure I do it right. But now I've got that credibility and I can do that. Why? Because I have my numbers right on the beginning. I built something from the ground up, and you can do that too. I need to hop off here. I got a hard stop, so I apologize if I didn't answer any questions. I'm inviting you guys, come into the Georgia Super Group at 10. I'm getting ready to roll off of this and open that up, and we can finish up and ask more questions if you guys have the opportunity and the time to do that. Okay. Sorry, I couldn't finish anything up.
Carson.
You're welcome. So
Appreciate you.
join me, even if you're not in Atlanta, it's okay. Come and join me because I want to help as much as I can. Okay. So look at the archives. If you got some other questions, they go back 3 months and you can pick up some of those that'll help on Walk the Flip. But I need to jump off now. Appreciate your time, everybody, and I'll talk to you soon.
Carson.